Okay, everyone, thank you for joining us for our November Lunch and Learn series. We're going to be starting it out talking about the purchases clearing account. Our webinars this month are geared toward gaming up for year-end close. Next month, we will have only 2 webinars, which will focus on year-end close procedures. We'll hold one early for East Coast customers and at standard time 11:30 for our West Coast clients. So you're welcome to join either one. Those will be going out in our December newsletter. And then we'll be on hold for webinars for the month of January while all of our clients get caught up on all their year-end stuff. So today for Purchases Clearing, we have Mr. Robert Rusinello presenting. And with that, I'm going to turn everything over to Robert. Robert, welcome and thank you.
Great, thank you, Sherry. Okay, so today's session on purchases clearing is one that we get lots of questions and issues from clients all around the spectrum. So I'm going to try to demystify what exactly is purchases clearing, how to use purchases clearing for reconciling, and maybe what are some of the issues that we typically find around purchases clearing and how to help resolve them. So with that said, let's go ahead and discuss what is purchases clearing. Well, essentially it's a balancing account in the accounting system that allows us to reconcile the GL when we receive inventory or we receive goods separate from receiving the invoice. This is more of an accounting function in that when we receive goods from the PO module and it's at a separate time from the receipt of invoice, of course, we have to debit inventory as for recording the inventory that came into the warehouse. But since we haven't received the invoice, we can't credit the AP account. So purchases clearing, or as I like to think about it, accrued accounts payable, is a liability account that allows our accounting system to balance. Now, when we subsequently receive our invoice and we're ready to credit AP, what the system does is debit the purchases clearing account, and thus once we have a completed cycle of receipt of goods and receipt of invoice, the corresponding debits and credits to this PO should wash each other out, and thus what we're left with is a debit to inventory, credit to AP. So purchases clearing, nothing more than an accrued accounts payable that allows our system to essentially stay in balance. We're going to jump into the system in a minute. We're going to see where we set up these accounts. They're set up in product line maintenance. You typically do not have to go into product line maintenance once the system is set up properly. However, if we assist clients and things are not posting where they should be, this is the first place we look at is product line maintenance. That is where the GL postings are configured for purchases clearing. Now, postings only come from inventory items. So, of course, in the PO module, we can buy inventory. We can also buy non-inventory items by using miscellaneous items. Thus, we can buy office supplies. We can buy other goods and services that are not captured in inventory. However, any of those miscellaneous items are not going to hit the purchases clearing account in the same mechanism that our inventory items do. So purchases clearing that post to the purchases clearing accounts that we set up in product line maintenance only come from inventory items that are processed through PO. And finally, we can check PO options to post AP invoices. Let's look at that together. So let's jump into the system. And let me explain some of the things we just discussed. First off, when we configure the system, we go to the inventory module. We go to product line maintenance. And in product line maintenance, under the accounts tab, we have an account for, or an area to populate purchases clearing. This is the account that gets debited and credited each time we have a transaction that will affect the account. So if we find that we're trying to reconcile our purchases clearing account to the GL and things are not where they should be, we're first going to look at all of your product lines and see what account this is hitting. And that's going to give us a clue as to what our purchases clearing report is going to be balancing to. Second, when we set up the PO module, we have a checkbox here to allow AP invoices to process through the PO module. If we uncheck it, what the system is going to do is it's not going to allow you to post an invoice through the PO module. At that point, clients would need to post invoices through the AP module. I've had some situations where clients have asked to process this way, and we'll discuss that in just a bit. But certainly having this checked off will allow us to process receipt of goods and receipt of invoices in the PO module. Now we're going to go through a couple of examples of really how the system is set up to process receipt of goods and receipt of invoices. And we're going to start with an easy example. Then we're going to move to a more complex example. An easy example is such that we process a receipt of goods for 20 units at $100, and we subsequently process a receipt of invoice 20 units at $100. Now, down below here, what I try to show is what happens GL-wise when we process a receipt of goods. Well, for a receipt of goods, we're going to debit inventory for $2,000. We're going to credit purchases clearing for $2,000. Life is good. And subsequently, when we process a receipt of invoice for that same cost, we're going to end up debiting purchases clearing and crediting AP. Thus, at the end of the transaction, at the end of the circle, we're going to have a debit of $2,000, a credit of $2,000. These wash, which is what we want when we have a clean transaction this way. And thus, what we're left with is a debit to inventory and a credit to AP and the subsequent invoice. Very easy, straightforward transaction, should not cause us any grief. I'm going to walk through it in the system first, and then we're going to go to a more complex transaction to see what happens there. So let's go into the PO module. And we're in our good old ABC company. We're going to create a new PO. And for my vendor, I will use Airway Property. And under lines, I will select the first item. And I'm going to order, in this case, 80 units at $100 per unit. So my PO is going to be for $8,000. Now, let me also explain. I added a couple of more columns to my PO listing. These are areas that you may not see on your screen. However, they are in your PO module in the bottom pane. So I like to bring these up because every time we process a receipt of goods or receipt of invoice, Sage essentially documents it and allows us to see it in PO entry. So I'm going to go ahead and accept this entry. And I'm going to process a receipt of goods. And in this case, what I'm going to do is I'm going to do a partial receipt of goods. Even though we have a PO for 80 units, I'm going to go ahead and do just a partial receipt and show you what happens. And so I'm going to do a straightforward receipt of goods entry. It asks me, do I want to receive the complete PO? I'm going to hit yes. However, the vendor decided at this point they're only going to ship half of the order. So I'm going to do a receipt of goods for 40 units. And I'm going to print and post. Now my ABC company is currently in the year 2020. And we're going to get our subsequent receipt register. And when I get to the daily transaction register, what we'll find is we have our debit to inventory for 4,000, credit to the purchases clearing account for 4,000. Okay, life is good. Subsequently, 2 weeks later, the invoice comes in from the vendor, and we get ready to process a receipt of invoice. The beauty of Sage is the screens look fairly similar, so it's very easy for us to replicate what we're doing. We're going to pull up the PO number, and I'm going to put an invoice number. And when I get to my lines tab, I'm going to hit yes. However, since they only shipped us 40, they only invoiced 40. So this matches what I showed earlier with our T account. Go ahead and post this through. And we're going to update our receipt register. We're now going to get our daily transaction register. And what we should see is a debit to our purchases clearing account and a credit to AP, and a subsequent invoice that supports this credit to AP. So we debited purchases clearing for 4,000. We credited purchases clearing earlier for 4,000. Everything ties out. Our purchase clearing transactions wash. Life is good. Now, what happens when things do not behave this way? So the next scenario we're going to go through is when we process a receipt of goods for 40 units at $100. However, the vendor has, for one reason or another, invoiced us 30 units at $120, and then a month later sent us another invoice for the balance at $150. Maybe this is a commodity. Maybe they decided to change the price via an agreement. But here we have a situation where it's not identical. And so we're going to watch this transaction happen with the first receipt of invoice and then the second receipt of invoice. And we're going to see what happens with our purchases clearing report and what happens to the dollar amounts throughout the process. So we're going to go back to the system. Let's go ahead and reopen that PO. And let me show you what happens here. Since we have already received 40 and we've invoiced 40, okay, we have this visibility in our PO module of the line item. We're going to continue on with the same PO where we're going to receive another 40, and then we're going to be invoiced at 2 different times at a different dollar amount. Let's just trace this through. We have another receipt of goods, identical to what we just did. Now in this case, the balance remaining is 40, so I'm not going to change it. For all I know, the unit cost is still 100. We're going to print and post it through. Okay, so you know what? I'm going to change this to 11.1. And here we have all of our paperwork flowing. And we get to our daily transaction register, which should look identical to what we did before. Debit to inventory, credit to purchases clearing. And now let's do this. Before we start with our receipt of invoices, I'm going to walk through the purchases clearing report and see how this transaction appears there. Now, this is a report that you should be familiar with, that you should be using at least on a weekly basis. And it's found in the period end module of the PO, or the period end folder of the PO module. First one, the purchases clearing report. Now, if you're in 2016, you have this feature in the middle that says calculate purchases clearing amount using last cost or net amount received. If you are not on 2016, then you do not have this very useful, very needed feature in reconciling or printing the purchases clearing report and reconciling. We're going to talk about this in a second, but we're just going to run the report and we're going to see what it looks like on our one PO after we've done a receipt of goods for PO number 10047. Now, this report gives us several columns. This is our quantity ordered, right? Next, we have our quantity received and quantity invoiced. Now, the only items that show up on this report are those line items where the quantity received and quantity invoiced do not match. Once they do match, Sage removes them from the report and only leaves the remaining items that are unbalanced. In this case, you'll see that we did a subsequent receipt of goods for 40. So for our PO line item, we have received 80 and we have invoiced 40. This next column is our unit cost at $100. And here we should have a purchases clearing balance of 4,000. If we go to our GL, we'll definitely see debit entries of 4,000, credit entries of 8,000, leaving us a net credit entry of 4,000, which should be what we're tying our GL to. At the end of the day, when we run this report, we should be looking at the report total and tying that back to our purchases clearing account. In this case, it is account 200-03. And we have a credit balance of $10,900. and we see that we are slightly off. We're going to run the report slightly different, and we're going to trace that through. So now we're going to essentially do a couple more transactions. We're going to do a receipt of invoice, only this time the vendor gave us an invoice that is slightly higher. We're still getting invoiced for $40. However, we're going to process this invoice for $120. So now we have a situation where our inventory went in at $4,000, but we're getting invoiced for $4,800. Okay? So keep that in mind. We're going to go ahead and we're going to run this through. And almost done with our paperwork. Let's talk about our variance. So what we have going on here is and actually, you know what? I ended up erroneously putting 40 units on $120, but that's okay. I slightly veered away from the two transactions I wanted to show you, and so I think what we're left with now is we did a receipt of invoice for 40 units at $120. That's going to come out to $4,800. Okay. So what's happening in Sage right now is we did a receipt of goods for $4,000. Change this here. We actually now have a receipt of goods for, or we have a receipt of invoice for $4,800. So we now have a variance of $800. Okay, and that variance is needed for us to reconcile our system, because this $4,000 is eventually going to be sold off. This inventory is going to be sold off, and it's going to become cost of goods sold, and it's going to be expensed at $4,000. Well, in reality, the goods that we purchased were $4,800. So every time we sell something, we are underreporting the cost of goods sold in our system. So our variance allows us to essentially record that additional cost of goods sold immediately, while also keeping the purchases clearing account reconciled. Now, if we go back to our daily transaction register, we have the 100 units at, or I'm sorry, we have the 40 units at $120. So we actually have a debit to purchases clearing for $4,800, a credit to AP because that's what our invoice was for. And then we have a subsequent posting of $800 to a variance account, the variance account being 960-00-04. Now, if you recall, when we configured our when we configured our product line, there's also an entry for PO variance adjustment. This is the account that gets debited or credited when the receipt of goods / receipt of invoice price is different. So understand that this is where it's posting. And an issue I've also seen with some clients is they have this variance adjustment posting to the same inventory account for the product line. I would not recommend this. You definitely want to have this either as a separate expense account or even as a separate asset account, because if you end up having it post to the same inventory account, you run the risk when you try and tie back your inventory trial balance or valuation report to the GL, it's going to contain entries at the GL that are variances, and you run the risk of essentially writing up or down your inventory erroneously. So understand where the PO variance adjustment is posting from the difference between your receipt of goods and receipt of invoice, and it really should be a separate account from your inventory account. So now when we post this transaction, it's now posted. A couple of things I'm going to show you is, one, since we changed the unit price to $120, and we go back into the PO, the PO unit cost now reflects the change in price. Now, this is not an issue if you are receiving an invoice subsequent to receiving the goods, i.e., in this case, we received goods 40 units and we received an invoice of 40 units. Subsequently, we received goods from another 40 units and we received the invoice for another 40 units. Life is good. If I were to continue on and do a subsequent receipt of goods for 40 units and a subsequent receipt of invoice for 30 units at a different price, this price is going to carry through to the purchases clearing report. So let's try one more PO, and this time I won't have the same amounts I did and erroneously close it. So let's go back to our 80 at 100. I'm going to quickly get us back to where I was shooting for showing you, and that's doing a receipt of goods. And we'll receive 40. We're going to quickly post this through. And we have our debit to inventory, credit to purchases clearing. Go ahead and do a subsequent receipt of invoice. This time I will do it for an amount I was planning on. And we're going to do 30 at 120. Oops. Now I will do 30 at 120. And so understand what we just did. We have received 40. We received 40 initially at $100. We just received 30 at $120. So let's go ahead and put that back on here. Okay, so we should have a balance in our purchases clearing account of $800. Okay, let's go ahead and take a look at our purchases clearing report. I'm going to show you what it looks like with the last unit cost, and then I'm going to show you what it looks like here. So with the last unit cost, if we look at our PO 10048, we've received 40, we invoiced 30, and at the last cost of $120, we have a balance of $1,200 in our purchases clearing account. But wait, that's not right. With this transaction, we should have $800 sitting in our GL. Go ahead and take a look at our transactions for November 2nd real quick. And apologize, there's some transactions in November 5th. So we have 4,000. We have 4,000 that we received. We have 3,600 that was processed. And I take that back. Sorry, math is not correct here. So we had 30 units on 120 or 3,600. So really, our balance should be $400. Okay, but we ran the purchases clearing report, and it shows us $1,200. Okay, so when we have a situation where we are changing prices and we're not completing the line so that the line is removed and we don't have a variance, we really have an issue in the system. And for those of you not in 2016 and running into this situation where you have multiple receivers and multiple invoices on a single line for PO, it really is, we really did not have a simple solution for tying purchase of clearing to the GL. However, we now do. If we run this report using this feature here, and we go to our PO, we see the same 40 units received, 30 units invoiced, and even though our prices changed up to $120, our purchases clearing amount is $400, which ties to our GL. So very important. Again, prior to 2016, very difficult to tie the purchases clearing report to the GL if you had situations like this where you had one PO line that was received on at multiple occasions and invoiced at multiple occasions. Now remember, once we do a subsequent receipt of invoice to close this line item, okay, Sage is going to go ahead and record our variance, and it's going to properly post the purchases clearing amount and move it off this report. It is simply when we have multiple transactions that does not clear a line that makes tying the report to the GL very difficult until 2016, where we have this feature that uses the net amount received minus the amount invoiced. Wonderful addition here. So now, if we go back to our presentation, a couple of things on this report. Purchase clearing report, it is a real-time report. It is run for inventory items only. Much like we saw, if you're in a situation where you have multiple receivers and multiple invoices per line, even if you don't, you should be using net amount received to be able to reconcile to the GL. That way you're assured that you're comparing apples to apples when comparing the report to the GL balance. If by chance your purchasing system has been neglected prior to reconciling using the report to the GL, you may need to clean up old or obsolete POs from the report. And finally, this report is used to compare to the GL. Again, our goal with the balance sheet is to have as many reports as possible as backup to tie to our balances. We use our AP trial balance to tie to the AP account in our GL, and we use the AR trial balance. Well, the purchases clearing report should be a good report to use to tie back to the balance at the GL. Again, understanding that it's a real-time report, you have to be sure that you run the report in a timely fashion to then be able to compare it to the GL, or the report becomes stale. And at that point, the only thing you really could do is run the report on the first or second or third of the month, compare it to the live balance at the GL, and try to ensure that the balances at that point are clean, because you won't have a way to get back easily to the end of the month period balance. PO variances. I showed you postings will debit or credit the purchase clearing account up until the time that the PO line's quantity received equals quantity received. So as long as the quantity received and quantity invoiced for that PO line do not match, you will have an entry in the purchase clearing report. And once you subsequently close that line, at that point, Sage will add up the quantity received or the amount received and the amount invoiced, and will book a variance to the GL account that was set up in product line maintenance. And as we saw, every time a price changes, the PO price changes. So if we go back to our PO that started out at $100 and changed to $120, understand that the next time we do an invoice, Sage is going to default that invoice to $120. Or if we do a subsequent receipt of goods, it will default to the last cost in the system. Okay, so you know, just have to understand that this cost can change either from the last time you processed a receipt of goods or receipt of invoice at a different cost, or If somebody comes in here and changes this cost, it will flow through to the receipt of goods or receipt of invoice. And typical reconciling issues. So our typical problems we see with clients related to purchases clearing is one of several things. One, you process a receipt of goods in the PO module, but the AP clerk processes the invoice directly in AP. Now the issue here is when you process a receipt of goods in the PO module, Sage is going to debit inventory and credit the purchases clearing account. Well, when someone has an invoice in AP and they enter it directly in AP, they may erroneously debit the inventory account. They may debit the cost of goods sold account. Maybe they even debit some other account. Regardless, if they debit some account other than purchases clearing, what you're left with is a hanging credit balance in the purchases clearing account that will not get cleared until we evaluate this transaction to see where the corresponding debit came from. In addition, using it in this fashion really makes the purchases clearing report useless because we're never closing out those entries. Another item, the JE is done to the PC account at the GL. Maybe it was done to reconcile a prior period. Maybe it was done erroneously, but if a J is done directly to the PC account and we don't have a corresponding entry from the PO module, then that's going to cause an imbalance between the two systems. Something I like to do with clients that are having issues when reconciling at month end, the first thing I do is I always just go to the daily transaction register, and I strongly suggest everyone as part of month end closing to do is, as a practice at the end of the month, before you print out financials, even before you start comparing to the purchases clearing report, is you make sure all the transactions at the GL are updated. You can do that by hitting the daily transaction register and hitting print or preview. In my case, the file is empty. However, I have seen some situations where some entries have been to a prior month in October or September. And that means that those transactions are not reflected at your GL. So you're not comparing apples to apples if your purchases clearing report is updated, but your GL is not. So this is certainly is something that should be done just as a normal process for month-end closing. And then I mentioned earlier that the purchases clearing report is real-time and is not run with month-end closing. Unfortunately, this report still, again, is a real-time report. So if you run it on the 2nd or 3rd, and you have transactions on the 1st or 2nd that have impacted your PO system, you're going to have a purchases clearing report that's going to have transactions in it that do not yet exist at the GL. So for now, running this report real time is imperative. Finally, how to correct issues. So if you have a few errors, you're running the report and you are able to identify a few errors, you should certainly process a receipt of goods or receipt of invoice first to correct. This may yield secondary entries to resolve. So if we run our purchases clearing report and and we see maybe one entry from 5 months ago where we received 99, but yet our invoice amount is incorrect. Well, when I see a situation like this, my first thought is, we received the goods, but yet our vendor did not invoice us. That doesn't sound right. Maybe that's the case, but if that keeps happening, the vendor may not be in business for very much longer. So this is kind of telling me it's possible that maybe the entry was done directly into AP. If we have a situation like this where we have invoiced 5, but we received 0, maybe it's possible that we subsequently did a physical count or a cycle count, and that inventory is really in our system, even though we didn't do a receipt of goods. So these types of issues essentially leave our purchases clearing GL balance in limbo. And so to correct it, okay, in this case, if we miss the quantity received, we will want to process a receipt of goods for 5, but understand that by doing this, we will now have erroneously increased our inventory once for this receipt of goods and once prior when we did a physical count or cycle count and it added 5 units. So if that happens, we may have to adjust inventory and adjust inventory adjustment. Essentially, we need to reverse whatever transaction happened before that was used to fix inventory. In our case, where we have a situation where we did not process a receipt of invoice properly and we want to get rid of this, we could process a receipt of invoice, but now we're going to have possibly 2 invoices in AP. So when we do a receipt of invoice, we'll have to give it a new invoice number, and then we're going to have to adjust it back out at the AP. So fixing errors are going to require us to process it correctly in our PO module, but then may yield secondary entries to complete. Another option would be to purge obsolete POs. This should be discussed in detail in length at first. Now, this is a situation we work with some clients where we have POs or we have items in the purchases clearing report that go back to 2005, 2007. Obviously, they're erroneous, they're old, but we want to start using the purchases clearing report going forward, so we need to get those out. Well, this information all comes from the PO. So if we get rid of the PO, we essentially effectively remove those entries from the purchases clearing report. Now again, before we arbitrarily begin purging things, you definitely want to speak to us and we can identify that this is the best route of action and how we can proceed. There is a utility for purging POs, but certainly should be discussed and detailed prior to going that route or that direction. At the end of the day, if we have everything clean and we are running a report for net received minus invoice amount, and we have a dollar amount here, at that point, we now can go to our GL and we can do a journal entry to tie the two. We now have a good starting point that we can use. And finally, once we have a good starting point, and you're not used to reconciling the PO module and reconciling purchases clearing, at that point, I recommend the client for the next 3 days, run the purchases clearing report, tie back to the GL, make sure they're in balance, then maybe at the end of the week, do it again at the end of the second week, do it again, feel comfortable that the report and the GL account are tying, and then from there, you could certainly wait until the end of the month and use it as your reconciling tool. One other thing about this report that is very useful is not only is it used to reconcile purchases clearing, but certainly can be used from your purchasing manager to keep your purchase order in check or keep it clean. As you see here, as I mentioned before, if I've received this PO but I haven't been invoiced, and this is a fairly old PO, I would be interested to see what happened. Did our AP department erroneously post this directly in AP? What happened that we received the invoice but not the goods? Okay, what we like to see from a good functioning accounting system is three-way matching. Quantity ordered, quantity received, quantity invoiced. We want to see these guys tick and tie to keep our PO system as a well-oiled machine. So not only do you use it to reconcile to the GL, but you can run this periodically, really just to check up on how your internal processes are working. With that said, I will certainly open the floor to questions.
Let me currently unmute everyone. So if you have any questions, you can ask. You can also utilize the chat window.
Hello?
Hello? Yes.
Yeah, I have a question. Yeah, we are not using inventory account. What shall we do to clear this PO? We have like over 1,000 pages of this.
Robert,
hello?
Did you get that? I can hear you.
Mm-hmm.
Robert, did you hear the question? Did we lose Robert?
Yeah. I guess it doesn't matter,
okay,
but
Robert.
I like...
Somehow Robert got muted. I apologize for that. Robert, did you hear the question?
Yes. Can you hear me now?
Yeah, I can hear you
now.
Okay, great. Sorry. Okay, so let me just confirm. Are you using the inventory module?
No.
Okay, so that means you're just using purchase orders to record non-inventory items.
That's correct.
Now, when you're using that, you're not really dealing with the purchases clearing GL accounts that we discussed in this section.
Yes,
now, what happens
correct.
when you have miscellaneous items like that, and let's use an example that we have labor, subcontractors that we're working and we're doing a PO for them, and we do a receipt of goods to record that they did some work, but we haven't received the invoice. Well, with miscellaneous items, what Sage does is it does not record any entries at the receipt of goods. It only records them at the receipt of invoice. So if you're interested at the end of the month and accruing any type of expenses from the PO module, you'd come in here and you would do miscellaneous items because you wouldn't have inventory items. And when you run your report, this report is going to tell you all of your POs that you've received but not yet invoiced. And so this is the amount that you should do a journal entry to record your accrual. So whereas had discussed throughout this presentation was dealing with inventory. In your case, you don't have inventory, so this report is going to be your basis for doing a journal entry to debit labor expense and credit some type of accrued accounts payable account.
Mm-hmm.
So for miscellaneous items, it's going to work a bit different than it does for inventory. Does that make sense? And,
yeah.
And so in your case, if you have things going way back when, you very well may have to, you may have to go the route of purging just to get back to square one. But certainly before you do that, you'll want to discuss with us, and we can connect with you and look at the system and make that determination.
Yeah, because I'm not really in purchasing. I'm just wanted to see, because I run the end of the month clearing account and nothing ever happens.
Nope.
It's got thousands of pages.
Exactly. So what's happening is you're accumulating all of these receipt of goods, but you're never processing the receipt of invoices in the PO module, so they're never leaving your system. So we may have to adjust the way you do things if you want to use this to accrue your expenses. So yeah, certainly maybe some cleanup, maybe a change of process, but you could certainly use the PO module to do both. Okay?
Yeah, I would have to call in, I guess.
Definitely, yeah. We can always connect and kind of evaluate where you are and make that determination of what you need to do.
Yeah. We have different systems within this Sage, so different other vendors. So.
Got it. Good.
Thank you.
Excellent. Any other questions?
Anything else? I'm not seeing anything in the chat window, or any other questions?
I don't have any more.
Okay, well, I will tell you what, we have another exciting ISM Lunch and Learn webinar coming up on this coming Thursday, the 10th, and that is going to be on, if my computer speeds up, Sage Inventory Advisor. Tom Wilson from Sage will be joining us to present the Sage Inventory Advisor, which helps you keep track of your inventory in an automated manner. So if you haven't registered for that, please do so. And thank you for joining us, and we hope to see you at future webinars. Oh, and a note, you will be getting a thank you for attending tomorrow, and we've attached a little survey to that. So if you click the link and take the survey, we would greatly appreciate it. Thanks, everyone, and have a great day.
Thank you. Bye-bye.
Thank you.